and welcome to Thursday's episode of Income Protection Action Week. Before we get stuck into today's content, we're keen to know what action IPAW has inspired so far. We'd love to hear from you about what you plan to do differently or what you will do more or less of as a result of what you have heard or seen this week. We hope you are building your action list, as this week is all about making a meaningful difference and helping to make a difference in the market.
That's right, and it takes the whole industry to make a difference, and we all have a role to play. This is only my second IPAW, but what struck me last year was hearing how the content genuinely inspired the audience to take action, which is fantastic and something we'd love to see more of. So let's take a look at today. Coming up, I'll be revisiting Consumer Duty 2 years on. We'll also be considering the importance of annual reviews with a particular focus on claims. And finally, we'll be asking advisors how they ensure clients get full value from their cover in terms of making use of value-added services.
Today's topics are not new to IPAW, but definitely worthy of a reminder, as they really are important and have the customer at the centre. It's imperative we all keep Consumer Duty front of mind, even though the implementation phase has now passed. Moving on to regular reviews of cover, we know that as an industry we could be better at this. On screen now is a graphic highlighting some reasons that could prompt a review, and in considering the list, the chances of one of these things happening within a 12-month period is perfectly possible, and as we know, at the very least, an annual review can be used to usefully remind clients of the value of their cover. LV's Reaching Resilience report highlighted the real need for regular reviews, with 3 out of 4 workers having experienced major life changes since they bought their policy, but with only 28% of them having updated their cover, and, most alarmingly, with 7% of them not realising that they could. And if clients don't realise that they need to review their cover, it's highly likely that they are not familiar enough with their policy to realise additional benefits are included and how they could be getting full value from them. Research by Royal London has previously shown that just 16% of customers knew that their policy included some sort of additional support or benefits. The Beneath the Surface report by Pacific Life Re in 2024 concurred, showing that many respondents were unaware of what was included with their policy, and even those who knew about them were slow to engage with them. So, a huge opportunity for advisors and a way that we can definitely be serving customers better.
Yes, these findings really do make a convincing case for today's session. And first up, let's take a look at what happened when I caught up with Keith Richards at the Consumer Duty Alliance to discuss all things Consumer Duty and to reflect on the landscape 2 years on. Last year, we had the pleasure of speaking to Keith Richards from the Consumer Duty Alliance to speak about Consumer Duty 1 year on. That conversation proved to be very popular with advisors, so we felt it was worthwhile revisiting this important topic as part of IPAW. So Keith, thank you for joining us again. It's great to have you back. For anyone watching who may not have seen our previous chat last year, can you please remind us what the Consumer Duty Alliance is?
Of course, and it's great to be with you again, Vicky. The Consumer Duty Alliance is the very first dedicated professional membership body for the personal finance sector, which incorporates mortgage protection as well. It's independent, not-for-profit, and very importantly, it's got no commercial output or activities, so completely unconflicted. The board are all pro bono, so it's mainly practitioners from the sector and other subject matter experts that give their time up for free. And we are looking to develop a protection alliance. So again, we don't want to leave any practitioners out across the sector. Not least, of course, Vicky, Consumer Duty really has started to join up a more holistic approach. So even if you're a specialist in the wealth area, the message is now getting through that you need a more holistic approach under the duty. And if you don't specialise in an area, then you do need to have an arrangement where you can pass your clients on or introduce them to specialists in those particular areas. And of course, it's becoming an interesting landscape, even with an aging demographic where you've now got lifetime mortgages starting to be considered, even by some of the advised clients under an IFA. But that might not be an area where an IFA is particularly familiar. So we're starting to see a bit more join up between protection, lending and wealth management.
That's fantastic news. And I mean, you've expanded hugely, and really, music to our ears to hear that there will be a protection alliance. And I'm sure lots of people listening will be very pleased with that news. So we look forward to hearing more about that next year, Keith.
Yeah, indeed, yes.
Since our conversation last year, Keith, what are your observations with regard to how insurers and advisors are responding to Consumer Duty 2 years on?
Yeah, it's like all major reforms, Vicky. It varies. It varies across the sector. But let's start with the good news, because even the FCA are regularly giving examples of good practice where they're seeing the market really moving forward in evolving their services to align with outcomes-based regulation. And I think just for the listeners, just to remind everyone, the reason that this is so significant is regulation was introduced in the late 80s, and we've had the best part of 3.5 decades of prescriptive rules-based regulation. Now, that's often meant that good firms have had to create checklists or tick box programs that haven't necessarily resulted in better outcomes for the client, for the customer, but we've had to comply. Otherwise, you're in breach. The major difference now is a shift to outcomes-based regulation means that you can throw the tick boxes away. You can unwind complexity if you believe that it improves outcomes in one of the 4 key areas of the duty. And candidly, if anyone really just take the time to have a look at the 3 cross-cutting rules and then the 4 areas of outcomes, I would suggest that every good firm passionately believes that they deliver against those outcomes. And I think what we're now seeing is that there's positive evidence that most firms are focused. So I think the good news from a regulatory perspective is the regulator is now seeing that instead of someone failing a regulatory process, even where a consumer has not been disadvantaged, that's the kind of regime that we've had in the past. Now the regulator is actively working with the market where it can see itself that actually firms are committed to trying to deliver the right outcomes, even if sometimes there could be improvements in the way that, for example, we communicate with clients or the way that we simplify our language. Take financial advice. I was on the board of advice firms when we moved from, I was on the board of a firm when we moved from Reasons Why letters, which was a 1-page document, and some of your listeners might remember those as well, to the need to go to more complexity through a suitability report that included more of the soft facts, not just the hard facts. But they then grew from probably starting their life as 6 pages to, I can remember signing off, thinking it was bonkers at the time, but we signed off on a 75-page suitability report.
Wow.
Well, knowing full well that it would add no value, but our compliance were convincing us that's what the regulator expected us to do. So we did it. We complied.
Crazy.
But what we're now hearing from the regulator is we need to unwind all those things because the regulator accepts. The regulator didn't tell us to do those 75 pages, by the way. We came up with that ourselves. And whether it's 75, 65, some of your listeners on here will, I'm sure, have their own tales of where they know that their clients don't read these reports. So they're really not delivering against improving client understanding, confidence and empowerment. But maybe unwinding to a 2-page suitability report is exactly where we need to go.
Absolutely.
And outcomes-based regulation is going to allow us to do that. So it's going to take a bit of time. First of all, we've had the FCA do a couple of big events with the Alliance, one in Scotland, one in Northern Ireland. We've got another one coming up in Newcastle, where the regulator themselves actually participate in 3 key sessions on the delivery of examples of good practice, which has gone down exceptionally well with practitioners. They're not evading answering any question that comes from the audience, which is really refreshing. But actually, they keep talking about proportionality for small firms. What they do recognise is small firms, by definition, you usually find the principal has to do a bit of everything. So they're usually a lot more engaged in the end client experience, the outcomes-based principle. I think we're now seeing a much, much different approach from the regulator, who's now actively engaging. They're certainly a lot more visible across the market. And
No,
we had some
I
events.
agree. I mean, I was at the AFM, Association of Financial Mutuals conference, and the FCA were there, and also at the recent cover event. So yes, visibility is good, and not hiding behind what they're trying to achieve is really useful. So it demystifies what they're trying to do, which is great, and aids understanding for everybody. On the subject of vulnerability, Keith, when someone claims on an income protection policy, by definition, they're vulnerable because they've suffered or are suffering from an illness or an injury, which means they can't work. Are you able to share any examples of what firms are doing well, and conversely, what they're not doing well, to identify and support vulnerable customers? And particularly interested if you think AI could be something that could be used in this space.
Yeah, it's whenever there's an increased focus on subjects like a client's circumstances. So the first thing I'd say to your listeners is vulnerability as a word, I think, has confused the issue, because we tend to think about people. I mean, clearly, if they've got a claim, then it's an identifiable issue that they're facing, and therefore that could give them a temporary period of vulnerability. We tend to move away from vulnerable circumstances to talk about client circumstances. And that's where that creates a need for different support, to bring in other colleagues. And to your point about AI, we are seeing that firms are using intelligent technology, AI, where it can identify different stress levels and then create questions. So so we're seeing that adopted across the market. It's about any client circumstance. So the first thing an advisor will do is try to understand a client's objectives. They might have to help the client understand that their needs actually should take a priority over their objectives. So they may want to do one thing, but an advisor will identify that actually there are other risks that they need to consider probably as a priority ahead of that. So we talk about the needs versus the wants. But a really important third factor when advisors give advice is they address vulnerability when they ask the question of, are there any other circumstances that I need to be aware of which might influence the advice I'm going to give you or the products I ultimately recommend? So what we're now seeing is that increased focus naturally plays to the role of professional advisors, where we might not have thought of the client as vulnerable per se, but we were really keen on understanding the client's needs and then prioritising those and providing the right level of support. What we've not necessarily been good at is identifying that we've addressed those vulnerabilities, but we didn't record it.
Yeah, really interesting. And one of the things that we identified in our recent 7 claim stories project, and we were looking at claims and how an advisor can help a claim, is actually a realization that many of our clients, we engage with them on email digitally these days. And many of them, if they're in a manual job or English is their second language, they don't understand the emails, or they don't work like that, and they don't understand some of the language being used, or even how to use email. Please attach a PDF document or print this. They don't know how to print it or how to attach a PDF document. So, we need to really be mindful of who our customers really are, and obviously that's the whole point of consumer duty.
So one of the things in vulnerable circumstances is technology can sometimes be a hindrance. It's not a great experience when you're having to kind of work out for yourself what you need to do. You just want to talk to someone that will take you straight to the support that you need. So I think we're seeing technology as an enabler for human beings rather than a replacement. I mean, there are some things clearly you can do, but I think it's making us think a little bit again about, sometimes utilizing technology that's enabled organizations, and especially big organizations and insurers, to perhaps make 50 people redundant. Maybe that was the wrong outcome, because it's not a great experience just dealing with technology alone, unless that's what you want to do. And I think that's the change we're seeing is, to your point, not everyone is as familiar using even email in the same way.
Just moving on to the next question then, Keith, if we can. As some of our viewers already know, the IPTF was created 20 years ago. So we're 20 years old this year. And it was created because income protection was under-advised and undersold at that point. It's been a bit up and down since, but just recently we've seen some very encouraging growth. Do you think Consumer Duty has a role to play in that and has led to more proactive engagement from advisors and providers with this product?
I do, absolutely, Vicky. I think there's a lot of conversation going around about the holistic financial planning side of things, and to be fair, also on the mortgage side, we've seen more active conversation about mortgage brokers not just being arrangers of a loan, but actually the supplier of advice, and in particular around protection products. In the financial advice world, there's a lot of conversation going on about being a bit more holistic again. Here's one interesting statistic. By the end of this year, 65% of the UK's wealth will be in the hands of women.
Yay! At last!
Yeah. Yes. And actually, it's not the intergenerational wealth transfer that's as big a threat as people had made out. But nonetheless, actually, what it's forced a lot of firms to do is think about not a client, but a family. So they tend to think about, how do you engage throughout the whole family? So we're seeing lots of advisors that are offering effectively a free consultation with adult children in particular. Those conversations are in themselves leading more often to a protection recommendation rather than obviously an investment, because they're more often in the place where they haven't accumulated assets at that stage, but they certainly need to protect, and they've often got young families, and income protection becomes absolutely a key consideration given the risks that we face in life. So I'm seeing it a lot more, financial advisors being drawn back into being a bit more holistic, but there are reasons for it. It's not just that they've switched on to it. They are thinking about the wider family of a client and how they engage the next generation to be the next generation's advisor as well. But if they're unengaged, there is that risk that I think statistically, when wealth transfers, is that they don't always use the same advisor.
No, but I mean, that's good news. And I myself have experienced that actually. My advisor has started, I've got 3 grown-up children, all one needing a mortgage, another just first job, pensions, etc. And that advisor has taken on a younger advisor to deal with the younger clients on their level. So that's all been very interesting, Keith. Thank you so much. Final question for you. It's just been over 2 years now since Consumer Duty came into force. But if firms want to benchmark their own practices or find resources to support the work that they're doing in this area, where can they find this kind of information? Where should they go?
Of course. Well, if they visit consumerduty.org, www.consumerduty.org, we've got 2 self-analysis tools that cover all aspects of Consumer Duty that will allow anyone. They're free to use. They can also be used as part of an audit trail. So where the regulator is keen that firms understand where they can evidence that they're doing the right thing. So it's no good just saying, I know I'm doing the right thing. We've got to be able to evidence that. There are 2 free analysis tools that any firm can access via our website, which will help them benchmark. So there are benchmarking tools as well. In addition to that, there's free resources available on the sharing of good practice in various aspects of Consumer Duty. But we also signpost off to other organisations because there is a wealth of information out there. But I guess a bit like consumers not knowing where to start, in fairness to advisors, that sometimes daunting for them as where they go. So we're trying to create a repository where it's not just about the resources we provide, it's signposting off to organisations like yours and others who can support and help them with that benchmarking.
Absolutely. And we're hosting in the advisor tools section of our website, which is the most popular visited part of our website. We are hosting some information about consumer duty, vulnerable customers, how to get in contact. So if anyone's listening, you can go through our own website too. Just click on advisor tools, top right hand side, and you can get through to the Consumer Duty Alliance information that way as well. Keith, thank you so much. That's been really useful. I'm glad 2 years on. Will I be speaking to you again next year? 3 years on, hopefully.
Well, consumer duty is here for good. It's never going to go. So unlike every other regulatory reform, which things like polarisation, depolarisation, retail distribution review, they're regulatory terms. Consumer duty is what we've always been about, and even the regulator now realises that they've introduced something that is permanent. And I hope we never go back to rules-based, prescriptive rules-based regulation. So I hope that I'm pretty confident, as long as we carry on the path that we're going to continue to see outcomes-based regulation lead the way, which means the sector can own it. And on that basis, I think the Consumer Duty Alliance is here for good.
Excellent. Good news. And on behalf of the protection industry, I'd like to thank you, Tony and Emma, and the Consumer Duty Alliance for all your support for our industry. And we cannot wait to see what the Protection Alliance looks like. So we look forward to that one. Thanks ever so much, Keith. See you again next year.
See you then, Vicky. Thank you very much.
Great to hear from Keith Richards there, and as he mentioned, it's well worth checking out consumerduty.org for a wealth of valuable resources from a trusted source. Right, next up, we're turning our attention to annual reviews. Now, this is a topic that's featured regularly in IPAW, not least because it's the right thing to do. But this year, IPTF has been working with Phil Deacon on the 7 Claims project, which shines a spotlight on the income protection claims process. As part of our work with claims professionals across the industry, we couldn't help but notice the implications for clients at point of claim if cover hadn't been regularly reviewed. So we assembled an expert panel to explore this in more detail.
Today we're discussing something that doesn't always get the attention it deserves, and that's the importance of regularly reviewing a client's income protection cover. We'll be talking about why reviews really matter, how to ensure they happen, and what can go wrong if they're missed. Now, this is a topic we've covered in previous years on IPAW, but we're considering it from a slightly different angle this year, which might be apparent as I introduce my guest today. I'm delighted to be joined by Tracy Boyd, Mortgage and Protection Advisor from Mortgage Hub Expert, and Rob Higgins, Senior Claims Manager at Cirencester Friendly. Thank you both for being here. Hello, Tracy. Hello, Rob.
Thanks for having me.
Hi, Vicky. Thanks for having me back.
Tracy, let's start with you, please. As someone who deals with customers and speaks to customers day in, day out, can I ask whether you do regular reviews, and why, in your opinion, do some advisors not do regular reviews?
Yes, 100% I do annual reviews with my clients. It's a fairly new thing. I can fully understand why advisors shy away from doing an annual review. I'm guilty of it myself in the past. Typically, as a mortgage advisor, I'll be putting a client on a 2-year or recently a 5-year fixed rate mortgage, which means I'm not going to speak to that client for potentially 60 months. It's a long time. A lot can happen to a client during that period.
And so when you do a review, what sort of questions do you ask? And essentially, depending on what they say, what sorts of actions might you take?
I'll typically ask them a set of questions which would include any changes to their circumstances. So, have you changed jobs? Has your living situation changed? Had any children? Had a new partner? Old partner moved out?
So that sort of lifestyle change. And what sort of changes might you make depending on what they say?
Typically, I'm looking to see if their existing cover is still fit for purpose. So, to give you an example, with income protection, if they've changed jobs, they might have a salary increase or indeed a salary decrease. Their employer's provisions may have changed with a new employer. So is the deferred period still correct with their IP policy? Have they had any children?
Okay, so all that kind of thing. So by the sounds of it, reviews can be a great way of improving client relationships, building trust, and would you say increasing retention, client retention?
Absolutely. It helps the client build confidence in the advisor.
And Rob, if I can turn to you now. So obviously the hope is that all advisors always review their clients regularly to ensure that their cover is appropriate for their needs as of that point. Can I ask you how often a client comes to claim and they discover that the cover they've got is not relevant and therefore the claim is not paid? Is that a frequent thing?
Yeah, it's a good question, Vicky. I think the important thing to say is that the bulk of claims are paid the full benefit that a customer is expecting. So, but there is a steady stream of customers that don't get what they're expecting because their circumstances have changed. And to deliver those negative outcomes is really, really not very pleasant for the customer, but not very pleasant for the person delivering that as well from my team. So, unfortunately, it does happen quite often. And I think we could do a lot, as Tracy said, about regular reviews to try and avoid that.
And so advisors can do regular reviews, but what can insurers do to support and help advisors to have those regular reviews, or indeed encourage customers to regularly review their cover and maybe make contact when a situation changes, so such as having children or changing jobs?
Yeah, I think it's really important. It's not just on the advisor's door. It's it's also for providers, you say, and I think providers can do more. Some things that Cirencester Friendly do is we send an annual statement out to the customer, and that has an illustration about if you want to achieve X benefit, you need to be earning a certain amount of income. And we're also recently sort of delivered a marketing campaign called the Check-In, where again, we're encouraging advisors to check in with their customers. But what we want to do is to make sure if there's any change in circumstances for the individual customer, let us know. We can then either sort of say if that's a potential impact, we can refer them to the advisor to go and have some really good conversations and make sure that that cover remains relevant.
Yeah, and I think on those, most, if not all, insurers now do issue annual benefit statements. And it's fair to say on there, it also explains value-added services that they can access through the life of the policy. So these are really important documents, and essential that they are used and advisors refer to them. So you touched on that it's a very difficult message for a claims assessor to deliver to a client that the claim won't be paid. Can you tell me a bit more about that and the impact it has on assessors?
Yeah, and the customer is at the heart of what we do, and ultimately we've got income protection to deliver a good outcome for the customer. But it is not a pleasant conversation to be having day in, day out for my team, and I'm sure other insurers and providers are the same. It's a really challenging call. We're there to provide a service. People take our income protection to be protected when they're not able to work. So having to say to someone that you can't have the cover that you thought you were having when they have, a lifestyle to maintain, a mortgage to pay that Tracy sort of mentioned earlier, and also, it's bills, it's food on the table. It's a massive, massive impact, and it's a really difficult conversation. Luckily, we do a lot of training and guidance around what to do, and we use the most experienced members of the team to do some mentoring. I'm sure other insurers are very much like that, but it doesn't take away. It's a difficult conversation that could be avoided.
It's trust as well, though, isn't it? Because a lot of people think and contact the advisor and say, is this going to pay out? I knew it wasn't going to pay out, this insurance. And we know insurers want to pay claims, don't we? And it just highlights the importance of keeping in contact with people to make sure that we know of those changes to avoid that situation happening in the first place.
I think income protection is a really positive thing in the market, because the mantra about providers and advisors is it delivers, it pays a lot. The percentage rate that comes out about percentage of claims paid is really, really positive. I just think we could do a little bit more from a provider point of view to really say, well, okay, we talk about misrepresentation and we say this is a percentage of the claims that's not paid because of this. How much of a percentage are we not, paying from our paid claims as a overinsured or not being paid the full benefit? It'd be interesting to insurers to lift the lid on that, perhaps.
Yeah, I agree. Tracy, coming back to you, Rob mentioned that most, if not all, insurers issue an annual benefit statement direct to the customers, and hopefully the customers will be reading that and understanding it. But what else do you think insurers or providers can do to support advisors in this scenario, to do regular reviews or keep advisors up to date?
I loved what you said, Rob, about the check-in, encouraging advisors to have the check-in. I'm going to be looking at that because it's nice language to use, isn't it? But I think making the annual review statement quite clear and very client-friendly, even as an advisor, when you get pension statements coming through, you get this report turn up through the post. And do we look at it? And even as advisors, we know we need to be keeping an eye on things. I think sometimes too much information is a bit of an overload for the client, and it needs to be really clear about the changes.
I agree. But what about understanding if a client has contacted the provider direct, either to change their to notify the insurer that they've changed their circumstances, or that they're in claim?
Yeah, some insurance companies are really good at letting the advisor know, or indeed directing the client back to the advisor to make any changes. And I think that's really important for the advisor to be included in those changes, really.
Sorry to jump in there, Kia. I think it's really important. We work with advisors as much as we can when it comes to claim. And when you are delivering not the best outcome to a customer because of those regular reviews perhaps haven't happened, I think it's really important the advisors on that journey. We want two people in the customer's corner throughout the claims process to make sure that we're able to assess a claim quickly. But also, if the cover's not right, for whatever reason that might be, we want the advisors like Tracy to be able to be A, aware of the outcome, but B, then they're a little bit more aware to have a conversation with the customer when they do return to work to say, well, actually, does this cover still fit your needs, and what can we do to make sure it's going to be fit for purpose in the future?
It's interesting you just mentioned the importance of the relationship between the insurer and the advisor, Rob. You were involved in the first story of the 7 claim stories, which can be found on the IPTF website, and an interesting read. We're taking 7 claim stories over a period of a year. It's being led by Phil Deacon, who is a claims assessor himself, and we're looking at different stories. But story 1 involved guiding a client through a storm. Can you tell us a bit more about that?
Yeah, thanks. I mean, that story was really important because you had a customer that was struggling with language barriers because this wasn't their sort of native country. And we worked with an advisor, Susanna, to make sure that customer journey to get the assessment done and get the claim paid was as smooth as it possibly could be. And I think we need to take that into regular reviews. I think we need to take it into making sure we're delivering on the customer outcome when it comes to claim, because we've talked a lot around those 7 stories, so I think it's 3 so far, about how can we make sure the outcome is the best that it possibly can be for the customer, and that is if advisors and providers work together.
Yeah, it's a really good point, actually. We need to make sure that all these things, annual benefit statements, are not just tick box. They are actually meaningful and have the real impact that we need it to have.
It's exactly what I was going to say. It can't be a box ticking exercise, and collaboration is absolutely key, and everybody sort of being on board on the same page.
So as we come towards the end of this session, that's gone very quickly, I'd love to hear your top takeaways for advisors or indeed insurers listening today, firstly to you, Tracy, what would your takeaway or request be to anyone listening today?
My request from today would be, please insurers, keep the advisor in the loop every step of the way of any changes, direct the client back to the advisor, because we're customer facing. We're the person that the client trusts. It also helps retain trust and build trust with the advisor.
Okay, good point. And Rob, to you, what would your takeaway or top request be to maybe advisors?
Yeah, I think the important thing is both advisors and both providers want to deliver good outcomes. To do that, we need the regular reviews, we need the check-ins to happen, and we need to make sure that cover remains fit for purpose. We would encourage advisors to work with us throughout a claim to make sure that everyone's on the same page and everyone knows what a good outcome looks like. And yeah, I think it's about working collaboratively to get the best outcome for customers.
So thank you, Tracy. Thank you, Rob, for really highlighting what is a really important subject. If there's one thing to take away from today, it's the importance of advisors reviewing their clients' income protection, which could be just as important as writing it in the first place. It protects the client and it protects the advisor's advice. We'd love to hear your top tips about client reviews and any examples of where you've been able to improve the cover your client has as a result of them. Share your story on social media and remember to tag us at #IPAW 2025. Now, often as part of annual reviews, and we touched on it today, advisors will talk to clients about the added value benefits and services that they have included within their policy. Next up, we have a great session on how to effectively discuss these additional benefits to help clients make the most of their cover.
Today, as part of Income Protection Action Week, we're considering what happens after the cover is in place, and specifically how to make income protection work harder for your clients. I'm delighted to be joined by two brilliant advisors to unpack this. Bella Streams, Managing Director at Velvet Mortgages and Insure Services, and Marta Scott-Maniszewska, founder of 5 Star Mortgages. Welcome, ladies, and thank you for joining today.
Hi, Jo. Thank you so much for having us today.
So before we go further, let's clarify what we mean by when we say value-added services. So these are non-claims benefits that come with income protection policies, things like a 24/7 virtual GP services, counselling services, rehab support, even discounts and lifestyle vouchers and benefits. So they're often available from day one of cover and not just when the client is looking to make the claim. But they're only useful, of course, if people know about them and use them. So Bella, if I can start with you, how do you introduce these services to your clients? Do you bring them up straight away in early conversations, or do you leave it until later on?
No, so I know every advisor can do it differently, but with us, what we found works is we kind of go through the main core benefits that they're wanting to take out. And then what we do is we schedule a call. We'll let them know always that you do get some free added benefits, but sometimes, especially when you're like giving all this advice, it can kind of all merge into one and they're not like picking up what you're actually saying. So what we've then done is we've done a process where we diarise it for 2 weeks' time, and then we let them know that we're going to give them a call and just go through everything thoroughly and what different providers are offering for their added benefits. So that's how we do it.
And Marta, how about you?
For me, slightly different. Most of my appointments are face-to-face. So most of my protection cell is at the back of mortgages. So at the point of protection meeting, I actually know quite well my clients and I know what works. So if it's a younger client, Gen Z probably plus, they would want to know what else is there, not just income protection, what else they can get, like you mentioned, discounts, GP services, other support. With older clients, they're sometimes surprised that they get this on top of it, but definitely depends on a person. I discuss it with each person individually. So
yeah. So there's no doubt then the value-added services are a great way to shift the conversation that you're having about protection from price to value.
Oh my God, definitely.
And they represent something tangible for clients rather than something that they hope they'll never have to use. So can I ask you both, and Bella, we'll come to you first, whether you find the response of clients is different depending on whether you speak about these services up front or later, and maybe as part of a review, for example. Are they perceived as a sales tool if you mention them too early, do you think?
I mean, I think so. I think obviously depending on the client, some people may think, oh, this is just a sales tool, but I do think it is really good because a lot of advisors and clients, they're not getting this type of information. Like 9 out of 10 times when I've spoke to clients before, they've said, no, an advisor's never gone through this, the added benefits. So actually by you going into that detail, then they're going to think, wow, they really know their stuff, and probably come back to you and introduce people to you as well. Because a lot of time when we're talking to clients, they do always say, wow, I've never been given it in this much detail before. So yeah, I definitely think some people can see it as a sales tool, but really you're just explaining the ins and outs of the policy, which is what you're meant to be doing as an advisor anyway. So
absolutely. And Martha, what's
absolutely. It's interesting what Bella said, that a lot of clients haven't got a clue about services available. Having said that, they're younger clients, they're very much aware of what's going on. A lot of them would come to the appointment and they've done the research. They actually specifically asking for the providers that can, for instance, offer you a discount on your trainers if you run it, things like that. So I think, again, depends on the client, but a lot of clients, as Bella said, they will see the value that you adding on as an advisor by explaining the services that are available to them. So
so if we can move now from talking about the benefits to what you do beyond mentioning them and how to make sure that your clients are set up and ready to use these services if they need to. So how involved do you get in that client side of things, Martha?
Well, I'm a bit of a control freak, so I love getting involved. Going back to Bella said, you just want to make sure that the clients are aware of what's available. So I normally would not allow clients to leave without having at least a leaflet of what's available. There is a great literature that most of providers provide us with, so we can present it to the clients. And also younger clients, they would literally be on their phone straight away during the meeting saying, oh, can we set it all up? Can you show us where it is, what app is to go to? So yeah, I am definitely is a great sales tool, but also it is something that you helping your clients and you want to make sure that they have access to.
And Bella, how about you?
So I'm not a control freak. To be honest, I don't usually tend to get involved in the downloading of the apps and things like that. However, when we do the like post-completion call, basically, I always say, if you're ever unsure of anything or you're thinking of maybe going to therapy or something's happened with your back, always contact me and I'll let you know what the free added value benefits are. And then I can also help you on how to download what app or what or provide you the number, whatever it is that each provider has for their specific added benefit. But sometimes I've had clients where they're a little bit older, they're not very tech savvy, so I've had to step in and get involved. So I'm not saying I don't, but just I don't for every single client basically, unless they ask me really.
Yeah, that's a great point you made there. Can I ask whether either of you have found that insurers have resources to help you get clients set up with these services?
Yeah, I think it depends when you ask them, to be honest. Sometimes when they've had the policy for a couple of years, the providers are like, oh, well, if you go onto the app, and then usually your BDMs, actually, they're very helpful. They're like, if they do this, if they download this, and then they have to put this number in, and then they kind of give it step by step, which is always helpful.
So there is a lot of literature, and as Bella said, the BDMs, and I mean, in general, the providers, the services are there for the clients to use it, so they want them to use it. They don't really want to be difficult or making it difficult for the customers, isn't it? So
top tip then for anyone watching, to use your BDM to help you get set up if you haven't done it before. So to what extent would you say that this is a real challenge for advisors? So it's another thing on the to-do list, right? Particularly if you're a mortgage advisor and you've gone through the mortgage and then you've had the protection conversation and now there's this to talk about as well. I'm guessing it's something that could slip off the list quite easily. Marta, what are your thoughts?
Yes, it's a valid point, but again, it depends really on the advisor. I really like to be discussing these things in the meetings. I really want to make sure that everyone's set up and they know what's available. Again, if you've got a back office, admin can be helpful. And in general, as Bella said, you are in contact with the client. So if anyone ever needs a help, they know they can always go back, and it really doesn't take that long to get the client set up. So
would you agree, Bella?
Yeah, but I think it's like, as advisors, we're used to doing how we do them. So sometimes when you haven't been used to doing them and you kind of feel like, oh, I don't want to, like, you kind of, really don't want to change your process. But I would definitely say that the 2-week post completion calls are brilliant, because then it's like, that you're kind of reaffirming everything that they've taken out and why they've taken it, and then giving them all the information on the extra added benefits. But what we also do as well is we try and touch base with them at least once a year, just because sometimes people can change, like maybe add another baby, or their salary's higher, lower, whatever it is. So I think if you're always constantly reminding them exactly the added benefits, they may not remember everything, but they might suddenly think, oh, I'm feeling depressed or something, and then oh, I remember my advisor said that, and it can just kind of like bring back them to touch base with you again, and then you can go into it if needed again. So
some top tips there, and definitely annual reviews is something we're touching on today in IPAW. So Marta, any top tips that you would add to help cut through the complexity of doing this for an advisor?
No, I agree with Bella. Basically, it's just keeping in touch with the clients, and obviously make sure that they're aware what's available. That's basically
so good communication with your client.
Definitely. Definitely.
So finally, can I ask you both whether you monitor or do anything to track which of these services your clients are using, and as part of that, whether you've had any feedback from any of your clients about, I've used this and it was brilliant, it's really helped me. Marta?
Yeah, absolutely. I mean, unfortunately, the human nature, the client's mainly going to get in touch with you when something happens or they need your help, basically. So very often, I've literally just going through the claim at the moment when my customer needs a physio. And again, he didn't even remember that he's got that benefit as a part of his policy. And it's only during the process when he literally mentioned that it's 12-week waiting list on the NHS, we like, oh, hold on a minute, why don't we just call your insurance company, make sure that you can access that. Equally, when we do reviews, very often, as Bella said, people just don't remember that they've got those benefits. I've got a really good example that I was doing someone's mortgage review just recently, and they mentioned that they've got a lot of trouble with the teenage daughter, and they couldn't really get any help, or the waiting list again was just horrendous. We're talking months rather than weeks. So we just sat there and I said, well, hold on a minute, what can you access through your policy? And it found out that my client could access the psychological help for a daughter through services, and it was great because she just came for something completely different for mortgage review. We just sat there, we phoned the clients. The clients was Polish, her English was her second language, so obviously we just sat there, we phoned the insurance company, booked their appointment, and she was like, wow, didn't even know I can access this. And it literally just like,
it's life-changing.
It is life-changing. Not to mention my own family. I've got a husband, got son who had an ear infection on bank holiday weekend, typical. What do? You can call your GP services, get prescription, done and dusted, sorted. It's great.
Really good.
I would probably recommend for everyone to look into it and definitely use it. It's for you to use.
And Bella, anything to add?
So I think basically exactly what Marta was saying. We sometimes as well do, it depends how many different policies there are, because sometimes we do about 6 for one person. So what we also do is we do a spreadsheet for them, so then they can always access it. It's saved in our Google Drive, but they have access, and then there's also a separate tab along there as well to say added benefits. So it will very simply say 6 mental health sessions, 6 physio sessions, private GP services, whatever they are, but then it's like, then they can just automatically think, oh, I do remember her saying that, and then have a look on the spreadsheet or contact us, whichever way they prefer. But I felt like that's worked quite well. I even had a client last Friday ring me to say, remember you saying about added benefits? I've been feeling a bit low and this, that and the other. And then I was like, yep, you've got this available, contact this number, this is your policy number, let me know how it goes. And then he did. So I
think that's brilliant actually, and it's a really good point, because clients often have multiple policies with different insurers, and knowing what they've got, and actually you could access sessions through different providers, so it's really helpful. Well, thank you both ladies for your time today. You've raised some really interesting points on what is a really important topic, and one I'm sure will feature again during IPAW. I think there's something for advisors and insurers watching today to take away. The point being, of course, that these services are a really important part of income protection, but only if clients know about them and they're visible and accessible to all. So that undoubtedly requires more work from all of us, and definitely more effort on the part of the advisor to make sure that their customers are aware. But there are lots of tips and tricks there that you've both mentioned to make life easier. So yeah, it's really important that all of us in the industry make the effort to highlight these services to clients and the value that they can add to our proposition. So thank you, Marta and Bella, for your time today.
Thank you
so much.
So next up, it's time for our advisor objections. So let's see which issues are being tackled today.
We make sure that we keep in touch with our clients on an annual basis to ensure that A, the policy is still fit for purpose, it's still covering their income and there's been no changes, and they're still aware of what the policy is doing and all of the value added services that go alongside an income protection, which might not necessarily result in a claim, but may prevent a claim from arising in the future.
Of course, I have to meet with clients on an annual basis, but I go one step further and try to meet them every 6 months and use these touch points to just sort of review their circumstances, any changes that have happened in the time since I last saw them.
If you're a mortgage broker, you're going to be keeping in touch with your clients around renewals and things like that as well. So you have that touch point every now and then. But what I also think is very nice to do for anything that you do for a client is maybe do a mailing list, keep in touch with your client, remind them that you exist, what's on in your world, and maybe they do have some questions to keep in touch with you.
Last week, I was in an appointment with a client and we were looking at their remortgage, and they just happened to mention to me that they'd rung their doctor's surgery that morning to try and get an appointment with a GP because they weren't feeling very well. And stupidly, they couldn't get an appointment for 6 weeks. And she said, I could be dead in 6 weeks. I reminded her of her Smart Health that she had on her old AIG plan, and she got an appointment the following day, a face-to-face video call with a GP in the UK, which she was delighted. She rang me back and thanked me.
So value-added services are a really important part of our conversation, and recently we've had a client who has gone through a claim with one of our providers, with the provider, and she has actually cited the support for her children and her husband as more valuable than the financial benefit that the policy gave her. With services stretched, especially in the NHS, being able to be signposted for support is really difficult. And actually having access to, in this case, a Red Arc nurse who was able to understand the frustrations that she was experiencing as a result of the claim and her condition. There's been materials issued to her husband, to herself, and to her children to help them understand what mum's going through and how mum might be feeling, and how just helps with that family dynamic. So value-added services in that capacity really add value, much more value to the claim rather than just a monetary benefit.
We had a bereavement and one of our family members was struggling a bit, so we were able to use the additional benefits on the policy, which was bereavement counselling, and they were able to have 6 sessions with a local counsellor in our area. So it was face to face, it wasn't online, it was very, very one-to-one. They were able to talk through their feelings, and it's fantastic. It's a brilliant resource that people may not be aware that is part of their policies.
So I've got a client at the moment currently who they've just had a baby. So we've reviewed their cover and realised that they could do with a little bit of additional life insurance, so some family income benefit. So yeah, that's really helped them. We're reviewing their cover and making sure it's staying relevant for their new situation.
My most recent one was quite dramatic. I had a client who had IP for £1,040. It had for quite a long time, chasing them to speak to them for ages. And it turns out, since I did that cover, they now are on £180,000 a year, and their household bills are now minimum £4,000 a month. So we needed to dramatically change the cover they had, the length of time they were deferred for, because their job, they were self-employed and now they were employed on a massive salary. And that just kind of highlights the importance of touching base with people more frequently. I mean, we've had ones before where we've actually discovered that someone had had a heart attack in our review and then they needed to claim on their critical illness cover. I had one where I discovered that somebody's child had had a sickness and we needed to claim on children's critical illness cover that was actually part of an IP plan. So actually the reviews, it can be about the cover, as that first instance says, but actually it's sometimes about discovering that clients had a need for the insurance that you didn't know about and they didn't realise they could claim for. So reviews are so fundamental because there's so many things you can find out in one.
Plenty of food for thought there for our advisor viewers, and we hope as ever what you have heard has highlighted a possible action for you to take, a review or a change with the way you do things, or something new to learn. Our content today has shown there's no right or wrong way to do something. It's important to do what works best for you and of course for your clients. We've recently launched Story 4 of our 7 claim stories series. These stories show real life examples of various claim scenarios that could make a real difference to everyone in the industry to pay more claims more quickly and ensure consumers have confidence in our industry that we will be there to support them at their time of need and when they need us most. Check out our website for these 4 stories and look out for the remaining 3 that will be released in the coming months.
If we look at our topics today and some possible next steps or actions, I suggest it's important for advisors to consider how they stay in touch with clients and, if necessary, review this process to ensure they have regular reviews and opportunities to make sure that clients' policies are up to date and relevant. For advisors, it's also worth looking at your process for educating your clients about all the benefits included in their cover. We know that this is yet another thing for you to do, but consider that these benefits can limit the length of time that your clients need to claim for, can help them return to work, and can even prevent a claim in the first place. And it's clear that there's a responsibility not to walk past this. They can also provide assistance to your clients for areas where they may have an exclusion and not be able to make a claim, but where help and support would be useful. Counselling for mental health issues could be one such example. So, is there a way you can let your clients know about what they have access to that can be built into your process too? I guess this is a plea to insurers and value-added service providers too, to think about materials and advisor tools that would be useful and making sure that advisors have access to these.
It's hard to believe it, but that's the end of day 4 of IPAW already. But we still have some great content for you for tomorrow. So make sure you are registered and ready to tune in for our final instalment.